Okay. And we are live. What's going on, everyone? Hope everyone's having a good day. Happy St. Patrick's Day to everyone here. Yeah, right after this stream, I'm heading over to the beer store, grabbing myself a case of Guinness. We're going to get the day off to a good start here. So today's stream, guys, we have a couple cool things that we're going to take a look at. We're going to chat quickly about what trade we ended up taking for the FOMC event. We're going to talk about a couple earnings trades actually as well. Looks like the season is not quite over yet. And then we are also going to do a quick scan using this scanner here that we have built into the Predicting Alpha terminal. It's been a while since we've used it. We've had an idea of things we wanted to look at coming into these live streams. But now with earnings season winding down, some of us might be sitting there wondering, okay, well, what are we going to do for the next little bit, right? I don't want to sit here and, wait. So what can we do? Maybe there's another opportunity that we can capitalize on, another strategy we can look at. So what we're going to do today is we're going to spend some time looking for those ideas. And if we can find any, we're going to go over them and we'll see if we can take any trades. Let me just get this chat set up here so that I can see all of you and the messages that you might have that you want to share. Eric, what's going on, man? How's life? Hope everything's good. So just quickly, the trade that we took on the FOMC event was just the back-tested strategy we talked about. Now, this is a really complicated position, guys. We put on long shares. We bought some shares. That's it. Right? Position is pretty flat right now. No change really. But yeah. Dan, is anyone going to Ezra today? Is that a thing? There's no way that's a real thing. Actually, I wouldn't even be surprised. But maybe I'll take maybe I'll take a little stroll down. What are you gonna do? Are you heading down there? There's no way. Okay. Yeah, while I'm waiting to hear back from you there, that's the trade, right? We just took on long shares. Remember, guys, this is the trade, right? We entered yesterday at the close, and we're going to close out today at the close. And the over the back test, what we see is that we make money on this trade 75% of the time. We're pretty flat right now, but that is okay. Let's see what the overall market is doing today as well. We can see Qs are down 0.5%. Let's see what SPY is doing. SPY is also down about 0.3%. And, whenever there's a little bit of blood in the streets, vols pick up a little bit and there's some money to be made. So we're going to talk about a few earnings events. And then we're also going to talk about scanning for some trades. So let's hop right into it here. Let's see. Oh no, it looks like I apologize, guys, if the stream is a little bit slow right now. It looks like it might be taking on some lag. Computer's kind of bugging out today, but hopefully it's not too bad. We'll take things nice and slow. Hopefully it doesn't crash. Okay, trade idea number one. Let's take a look. We have WSM earnings. Now, WSM earnings, this is one of those that it doesn't really meet my criteria for taking a trade, right? We want to see a clear edge when we're looking for a trade, right? And right now we're seeing, an implied move at 8% and an average move at 9.6%. And, off the bat, you might say, okay, well, if the market thinks if it's priced as if it's going to move 8%, but on average it moves 9%, well, it looks a little cheap, right? But when we look at the P&L here, it's super choppy, right? It's like 50% of the time it's up, 50% of the time it's down. It's not super clear one way or the other. You know what I mean? Like, it doesn't really scream buy options here. Right? Let's see what we got on the call side. The calls have been pretty profitable. The puts, not so much. So we could maybe look at structuring something to the upside here. Right? It looks like we get a lot of up moves. And if we do get a down move, it's usually nothing too crazy. So we could maybe do something like that. but I wouldn't be buying or selling vol here just outright. If we come to the vol insights for it, we can see there's not really any call skew or anything to take advantage of. So you could maybe sell a bull put spread or something like that. Might not be a bad idea. We got a little bit of that put skew we could be selling into here. Or actually, no, you want to be doing it the other way. There's no real skew to take advantage of here. I don't think I would be taking a trade on WSM. There's nothing really for me to say here. So, that's okay though, right? The thing with this whole earnings thing is there's a whole bunch of opportunities. Not all of them are going to be great, but we want to just scan through them quickly, find the ones that are, hit them at the end of the day, right? So let's hop in, see if there's any others, right? I've got a few others on my list here that are coming up either today after hours or tomorrow before market, right? We have this one here for 5, right? We can see now this one maybe makes a little more sense, right? Look, we had this one huge move about 2 years ago. But besides that, for the most part, the market has been overstating the move, right? And we've been trickling down. We were up 135% if we were buying options back in late 2018. And since then, it's just been down and to the right. We have an implied move of about 7, average move of about 7.2. We can see that the average implied move has come down about 1.5 points, similar to what we see on a lot of other stocks right now that have been good shortfall plays. I would say this is a decent opportunity to be selling some vol. Right? We look here, max move we've seen in a Q1 is 8%. So I think this is definitely some risk that we should be taking on. If we come take a look at the skew, we can see that there's not really any skew. We should be okay to pick up some wings on this trade. So let's go price it out and see what this looks like. I believe it was 5, F-I-V-E. Wait, what? Oh, F-V-E. No, F-I-V-E. It's like, wait a minute. There's no way this has no option chain. So here we are. We're going to come here to the closest expiry, expiring in 2 days. Stock's trading at about $194, $195. So the first thing we're going to do, right? Think about what we're doing, right? We want to express a short volatility view here. And the best way to do that is actually to sell a straddle, right? So we come to at the money, we sell straddle. Let's see what this looks like. Check this out, right? If the stock, stays between 180 and 209, we're going to make some money on this position. And we're going to stress it in a second. But one of the reasons why we don't always want to do this is because of this tail risk, right? If the stock goes down to $100, we're going to get absolutely destroyed, right? And that is risk that, sometimes is worth taking on, sometimes it's not. And one way we can find out is, well, what would it cost us if we were to, we sell this at the money straddle. What if we were to go way out of the money and buy a strangle and turn this into an iron condor? What would our position look like then? Right, so we can come here and at PA, the way that we tend to do it is we go 2 straddle prices away from the at the money strike. So about $30 away. So if I come here, sell iron condor, we're going to put our at the money strikes at 195. Then we're going to go $30 down. So that would be 165. And we're going to go $30 up as well, which would be 225. And here is what the position would look like. My apologies. So this is what the position looks like. Right now we can see what's changed is, at first glance, the only thing that's changed is that our max loss is now cut at about the 165 strike on the low end and the 225 strike on the high end. Right? And that makes sense, right? That's where we bought wings. Think about it. We have one position that's going down and one position that's going up. They cancel out. So at those prices, we break even or we cap our potential loss. But there's actually one other thing about this position that has changed as well, which is that the break evens, right? So at this actual zero line have come in a bit. So on this iron condor, we start to lose money if the stock goes below 181 or above 208. With the straddle, we lose money if it goes below 180 or above 209. The reason that we have tighter break evens, right? Meaning, it doesn't need to be as big of a move in order for us to lose money, is because the credit we are collecting is less. We went from collecting $14.60 to $13.50. Right? So let's say the stock moved $14. We would still make money if we had the straddle, and we would be losing some money if we had the iron condor. But given that we're only giving up about $1 of our $14 that we would be collecting, I think it's worth picking up the wings on this position because it protects us against some of these really big moves that we've seen. Right? It helps reduce it reduces a little bit of the expectancy on our portfolio, but it also reduces some of our variance. Right? Meaning when you look at your P&L at the end of the year, if you don't ever have wings, a lot of seasons you're going to take some really big hits. And it can be very stressful, and depending on the size of your account, it can be pretty detrimental to your account growth. So I would highly recommend throwing some wings on this position here if you're going to take a shortfall trade on 5 earnings. Now let's move on. We've got ACN today. We've got ACN earnings. All right, so this maybe looks like one where it's worth picking up some vol. This might be an okay long vol play. Right, it's been realizing a lot of vol the last few events, right? 7-8%. No real clear picture if it's moves to the upside or downside. But yeah, we could definitely come in here, pick up some options. We could look at how similar companies have been moving around earnings, right? So, I guess it's really on its own in this space. We can see, though, that it looks cheap. Implied move of 3.76, average move of 4.46, right? And it's a pretty low implied move. And we can see that in the last 1, 2, 3, 4, in the last year of earnings events, it's actually moved more than 3.7%. Right, with some moves as high as 7.5%, almost 8%. So what we would do for that is we would just come over here, go to ACN. Right, now we gotta be careful. It's not the cheapest stock in the world, so make sure you're conscious of your max loss. I don't know, Curtis. I don't know if Salesforce would be a good comparison to ACN. ACN's like more of a consultancy, right? Like I feel like they fall more into like Deloitte or PwC kind of category rather than a Salesforce, wouldn't you say? Right, we could pick up the March 19 or the March 26 on this. Either one would be good. Let's have a look here. We buy the straddle. All right, straddle's going to cost us $10. Right? Let's say we put on a 1 lot. Let's see what our max loss is really going to look like. Yeah, exactly, Curtis, right? There's not that many public companies to compare it to. And that's why, one of the things that we do have in the terminal is this industry move comparison. And I know it's, Curtis, if you want to plan for the lag, I think it's about 5 to 7 seconds of lag. Yeah, ACN, we have no comparable companies for it here, but let's say we pull up, Apple or something. We have some to compare to here. I'm surprised Microsoft's not on here, to be honest. I'm going to have to go yell at Jordan about that. But yeah, let's go back to ACN here. One thing I want to see is, let's say I choose to buy options here. What is my position going to look like in the morning? So what I'm going to do right now is I'm going to stress this position for the drop in implied volatility that happens after earnings. Remember, earnings implies a bunch of volatility, right? Because earnings makes up 30 to 70% of how much a stock moves in a year sometimes. So we're going to drop the vols, and we're going to move time forward 1 day on Thinkorswim and see what it looks like. But one of the questions we always get is, well, how much should I drop the vols by to stress this position? And what we can do is we can look here at the term structure graph. So I went back to vol insights for ACN. We have the implied vol here at 36 and the non-event vol at 24. So what this tells us is after the earnings event, we can expect vols to drop about 12 points. Okay? So now let's come back here. We'll move time forward 1 day, right? So from March 17 to March 18. And now we're going to drop volatility by 12 points. We come here, we click on the little cog in the bottom right corner of our position tab, minus 12. Here's what our position looks like. A max risk on the trade is about $380 in the morning with some good room for profit, right? Let's say we see a move like what we did last quarter. Right, last quarter we had a jump of 6.6%, right? So let's say we see a move up of 6.6. We would be making about $550 per lot. Right? So I think this is a pretty good trade to take. You know, it's unlikely that we see a 0% move. I think this one looks pretty good. I think it's worth a punt. And we know that PA guys, we love our punts, you know? We don't take them often, but when we do, we punt hard. So what else do we got on the menu, right? So ACN looks pretty good. 5 looks pretty good. We got WB. Another earnings coming up. This is another one of those that I'm not really seeing any edge. You know what I mean? Like, look at this P&L. It's like 50% chance it goes up, 50% chance it goes down. Like, there's better trades out there for us to take. There's no point in us wasting time on this. So, Curtis, we can definitely talk about taking a longer dated straddle. What would be the benefits or the trade-offs of taking a longer dated straddle? Let's come take a look here. Let's go to maybe the April 1st. Let me just put my phone on mute, guys. Sorry if you can hear it buzzing. Let's see. Buy. Oh, not a single. Buy straddle. So here is our current one. So this is now 15 days away. But vols aren't going to come down 12 points here. I think they're going to come down a little less. So we have to come back, change how we've got it adjusted. Let's go to ACN. Right, so the 20-day vols from 30 to 23, so they're going to come down 7 points. Yeah, but if you also look at it, it has way less gamma. Or it should have less gamma at least. Let's see. You're looking at the March 26th. Right, so on this we have, at the money, we have 82 gamma. Oh, wait, we got to put it to a 1 lot. Let's see here. 547. Yeah, right. See, like you're going to make so for a similar sized move, you're going to make about half the money. Right? So yeah, you risk less, but you also make a ton less. Right? And given that we're trying to isolate the event, unless, is there any sort of announcement drift that we'd want to maybe hold it for more than a day? I don't think we have the data for that. You could do that, but you're taking on less risk for less reward because you're less isolated on the event. Does that make sense? Right? With this one here, the March 26th, vols aren't going to come down as much, but yeah, I would say stick with the March 19th. That would be my recommendation. Right? It expresses our view better. Right? We wouldn't want to take it just because less theta. We'd want to take it because of our view. Right? Otherwise we could go trade the the leap. And then no matter what happens around the earnings, nothing will change. Unless something crazy happens. Okay, let's keep moving here, guys. We're going to go through a few more. WB. Right? Quick look at this. I'm not seeing any trade. It's just way too choppy of a P&L, right? It's basically flat. Implied move a little bit less than the average move. There's just not really any trade here, in my opinion. Analyst, what's going on, man? Happy St. Paddy's Day. You cracking a morning beer with me? What's the deal here? Not having a beer just yet, but I do have my Guinness pint glass for water. Just for the culture. Okay, so no trade on WB. Right now it's looking like FIVE is looking all right for a short vol play. We have ACN looking pretty good for a long vol play. And then we have DG. Let's take a look at DG here. DG is sort of a nothing burger as well, There's nothing really. It's just too choppy. It's kind of a pretty crappy P&L. It doesn't really give us any insight. You know what I mean? Last few earnings events have had a no move. It looks like it's either a blowout or it's no move. Right? Last three events, you can see it comes way back down real quick. Right? And, I don't think I'd be taking a trade here, but, maybe you take the reverse punt. You punt a short vol trade. But yeah, nothing too exciting here. So the trades for the day so far, FIVE, short vol looks pretty good. ACN, long vol, also looks pretty good. Those are the two that we'll check in on again tomorrow. And what I'm going to do now, because I know we have a bunch of new members at PA. I'm sure a lot of you guys are on the live right now, checking in, seeing how we're using the terminal. I want to show you guys a little bit about how to use this scanner here. Right, we're going to spend 5 or 10 minutes chatting about the scanner, maybe trying to find a trade. Maybe we'll look, Eric, what do you think, man? Should we look for, let's look for short vol. Let's look for maybe some ETF short vol, something like that. And then maybe a 132 fly or something at the end as well. So the Predicting Alpha terminal currently looks at 1,249 equities. And we can see that down here. Okay, so right now, this scanner is showing us 1, 2, 3, 4, 5 of 1,250 potential entries. Okay, this is going to be bumped up to 3,000, I believe, next week. All right. Now, what you can notice is there are all these different columns. Right, ticker, price, option volume, IV versus forecast, IV 30, 90, forward vol, skew, call put ratio, lots of different things that we can take a look at here. Okay? And how we're going to use this is when we have an idea of something we want to look for. Let's say we like to collect premium. Well, we can use this scanner to identify the best stocks to be running short vol strategies on. It handles the data mining side of things for us, helping us filter through the opportunities in the market to whittle down all the potential opportunities into the best ones, right? It's sort of like sifting for gold. Now, the reason this is beneficial is Most people, what they do is they follow a couple different stocks, or they're relying on something like StockTwits to point them in the direction of where something might be cheap or expensive. But when we're trying to do that with just our eyes, it gets tricky, right? Let's say you follow Apple and Microsoft. There's not always a trade there, right? But there might be other opportunities out there that you're just not seeing. So this scanner helps us find those, and then it's our job to use the rest of the terminal and our research to understand them and decide, are we taking a trade or not? Now, a cool update I'll tell you guys about for the PA guys. We are adding, so this search bar here is going to be replaced with a drop-down menu with preset filters for different strategies. Let's say you want to do short vol or PA flies or back spreads or, bull put spreads or a couple other different strategies. You're going to have a strategy filter built into the terminal that helps you find the best trades for it. It'll just automatically apply all the different filters. So let's go and try and find a short vol trade. Now, the first thing that we want to look for is we want to make sure that the stocks that we are trading are liquid. So what I'm going to do is I'm going to come here and I am going to, because I think it'll be a really good feature, guys, because, this table can be a little finicky if you're not, it can be annoying. It can be annoying sometimes. We all know it. So let's put in a price filter, $15. Average option volume, 3,000. Okay. Basically saying I want my stock to be, not a penny stock and at least have some action going on around it, right? Something actually happening here. And now what I want to do. Oh, Ernie, what's up, man? Good to see you. I hope you're doing well, Ernie. Right now, IV versus forecast. What this basically does is it takes the implied vol number up here, IV 30 day, and divides it by the PA forecast, right? So we're saying, here's what the market thinks volatility will be over a 30-day period, and here's what we think it'll be over a 30-day period, given some different vol forecasting models. And on another live, we can talk about what goes into that if you guys want. So if this number is higher than the forecast, right? If implied vol is higher than the forecast, the number will be greater than 1, right? It'll be like, 100 divided by 50 is 2, right? So we want to see an IV versus forecast, let's say greater than 1, or let's go 1.2. IV versus forecast greater than 1.22. So now all the stocks we're looking at, right? We are now looking at 24 entries. We've already whittled it down to 24 out of 1,250 entries. Could you imagine trying to do this by hand? It'd be such a nightmare. Now I want to make sure that the stock is actually realizing a little bit of vol, right? So I put it to 24 there. And let's say, we want to see it in their IV rank maybe above 60. And if you look now, we actually have only 8 entries that we're looking at. So this looks pretty good. 8 stocks for me to look into today. Not bad. And then maybe what I'll do now is, maybe I don't want to have to, maybe I want to sort them, right? So what I've done now is step 1 was I filtered it down, right? I sifted for all the gold. And then maybe I want to sort them now in order from the biggest gold chunks to the smallest gold chunks. And let's say we're looking for expensive vol. Well, I can click up here and I can flip them. So we can see that HGen has an IV versus forecast of 1.55 and then run at 1.4, then 1.28, 1.24, right? So I flipped the list. I've sorted it by IV versus forecast. And now I have my scans for the day, right? We have HGen at the top of the list here. Let's see what this is. All right. HGen stock. I don't really know what this thing is. Humanigen company. Cool. Any of you guys know what this thing is? Do option traders know something about Humanigen stock that we don't know? This is the kind of news I like to see, guys. Right, we can see that IV. Oh, interesting. IV is on the rise here. Right, something's going on here. Stock's not moving at all, though. Daily implied move of 15%. right? It's moved 3% today, right? So what we can see off the bat, right? Step one is complete. We found a stock that looks inefficient to some extent, right? Implied vols are really, really big here. Especially like on the 30-day, we're basically near the max. The 30 and the 10-day are like way up here. How long has this stock been around? It's a pretty new stock. But this does look to me like the market is implying something to be coming up. Right? Something's going on here. Data's looking a little wonky. Something's up. So I would definitely recommend, if you want to look at this stock, before you go out and just blindly sell vol on it, there's step two, which is we need to understand why we're seeing this. If we can't pinpoint exactly why we are seeing this, we can't be taking the trade. I'll give you an example. When GME first had a rally, right, when it first had that retail pump, Jordan and I know someone who was looking at the leaps on it and made $1 million in 2 days selling those leaps, because they knew that it was the retail audience buying up these leaps and that the implied vol was almost certainly going to come back down eventually. Now, the second pump, Jordan and I were looking at that as well, but we couldn't figure out why it was so high again, because we were looking into it and the retail activity around the stock was significantly less, like nowhere near as close. And we couldn't figure out why it was pumping again. So we chose not to take the trade. Now, it would have been profitable. If you guys look in the traders chat, I think Tico was looking at them as well. And he said he took them on paper and it would have been up a ton of money. But we can't take a trade without understanding why we are seeing the inefficiency that we are. So you'd want to come here, you'd want to do some research, figure out what the heck's going on with this thing. And if you can understand it and you think that it's irrational, it would be a great opportunity to sell some vol. And that would be the same for all of these, right? We got Run. What's going on here? Right, Run has an implied vol of 166 and a forecast of 118. Right, we can see that vols drop off around between the 30 and the 60 day though, right? So something's being implied in the near term here. Right, if you look at this, vols come down 50 points between the 30 and the 60. Right, so once again, market's implying something to be happening in the very near future here. Are these companies that come out with like big news releases? Let's see. Run stock, what's this? Sunrun Solar Company, right? So there might be some sort of acquisition being priced in, something like that. If we look at the 1 month here, we see that implied vols just shot through the roof. So clearly some sort of news, something's going on around it. We would want to be looking into that. And that's really how the scanner is used, right? And so right now what we filtered for was a short vol trade, but you can use this to find long vol trades, trades for different strategies. There's really no set rules for what you can do with it. So what I'd actually encourage you guys to do is play around with it a bit, right? You have call put ratio on here, skew rank, right? Change in IV, implied 1 day move, right? So we can look for the one that has the highest 1 day implied move, right? Let's take off some of these other filters. Right. What has the biggest 1 day implied move? It's GameStop right now. And HGen was on that list as well. Is this a Wall Street Bets pump or something? What's going on with HGen? Right, we got AMC, the biggest 1 day moves. It's a lot of the meme stocks, But yeah, that's basically how the scanner is used. Over the next few weeks, we're definitely going to be using it a lot more on this stream as we move out of earnings season for a bit. We'll definitely be using this to find some cool opportunities. So guys, that is going to do it for this morning's stream. I am now off to the beer store. Time to grab some Guinness. Happy St. Paddy's Day, everyone. PA guys, we'll be talking to you in the chat. And for everyone else, it's a pleasure seeing you as usual. We'll talk soon.